The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, Election Day Tuesday is the start of a very pivotal week in the markets. Not only is it Election Day, we have the Fed meeting, we have a WASDE report at the end of the week. There's a lot going on. Feels like a lot of uncertainty and caution in these markets across the board. Grains, livestock, macros, energies, you name it. Let's talk about this all and try to put all this in perspective. Joining us now here on the show as we broadcast live from the Moving Iron Summit today in Nashville, Tennessee. We're joined now by Jim McCormick from agmarket.net at his office at Illinois. Jim, good to catch up with you. Thanks for joining us on the show today. Hope you're doing well.
Hey, Jesse, thanks for having me on. And, yes, it is Election Day, so let's get this out first. If you have not voted, make sure to go out and do your civic vote. And make sure you get your vote casted. Everyone counts. So make sure you participate in our, in our American dream, I would say.
Absolutely. Absolutely. I would echo that sentiment as well. And let's start with the election impacts on the markets. I think that's a good spot for us. Obviously, as I alluded to, there's a lot of events that have market implications this week. And I've felt Monday and Tuesday trade has been fairly quiet, range bound ahead of the elections. Would you agree with that, Jim?
I 100% agree. It's been very, very quiet here at our office. I mean, it's just, we're in a wait and see mode. Obviously, the corn market has bounced a little bit off of its earlier fall lows when it bottomed out at around 385. And we're just kind of pausing at the moment. Like you said, this election is one of many hurdles we've got to kind of go through this week. And let's face it, we got a very contentious election. The polls are essentially nip and tuck. But depending on who becomes president, it will have an impact on agriculture, potentially quite big ramifications, I guess I would say, Jesse. I mean, the fact of the matter is they both believe in tariffs. They both stated that. But I would argue President Trump is going to say he's much more aggressive on the tariffs. He's been promoting that aggressively. And we've had several different, agricultural councils that came out and said, hey, they are fearful that if we would have a Trump presidency and we did get into a tariff war, we would unfortunately probably agriculture could take the brunt of it. Simply because that is something we actually overproduce in the U.S. and we do, quote unquote, feed the world. And that unfortunately becomes the cudgel that some of these countries will push back on. And remember, the risk that the trade's worried about, Jesse, is it's not just China potentially, it's Mexico. Mexico has bought about half of their corn needs so far this year in the first quarter, which tells me the Mexican buyers are a little bit worried about a potential trade war. And like I said, we ship a lot of corn to them, but we also buy a lot of car parts made in Mexico. We buy a lot of cars that are made in Mexico. So the Mexicans are worried about. Europeans, if you look on the balance sheet of who we're shipping corn to, we're shipping a lot of corn to unknown destinations. A lot of people are thinking maybe that's China. We don't believe that's China, Jesse. We believe it's Europe that's buying this corn. And if you look at what's going on, where are we shipping the corn? We're shipping it out of the Atlantic coast, and we're actually shipping it out of the Great Lakes. So that tells me that is corn. The unknown buyer is not Asia, it is Europe, and Europe's buying some of our corn. But we're also threatening, there's a potential trade war with Europe as well. So it's something we need to be kind of cognizant of what happens. But I want to stress, even if Trump is not president and Harris does become president, it's not like these tariffs are going to go away. Obviously, she's showing no inkling in the Biden administration and shown no inkling to back off on the tariffs on China. They've actually increased the tariffs over the last 4 years. So something we need to be cautious of in agriculture, be cognizant of, if we do get into a tariff battle, whoever's president, unfortunately, agriculture tends to get the bad end of the deal.
I want to weave this in here. You mentioned this to me before we went on the air, and this kind of ties in with the Fed meeting this week as well, and what's happening in the macro markets, the money markets. You mentioned to me there is a lot of money on the sidelines right now in these money markets that are kind of waiting for some of these shoes to drop, so to speak, right, Jim?
Exactly. There's over $6 trillion in the money market sitting on the sidelines. That is a massive amount of money. And a lot is going to hinge on where they're at. I mean, there's a lot of money, let's face it, they pulled out of the market when Joe Biden was elected 4 years ago, and the Fed started raising interest rates with the argument that when he did that, we were going to go into recession. We haven't had a recession. Instead, the stock market's had one heck of a run. does that money get put into play if Trump gets elected? With a lot of people remembering when Trump was elected 8 years ago, the stock market broke hard, as I recall, on the night of the election, only to be on one heck of a bull tear after it. So, does that money come in? On the other hand, we got to look what the Fed does. As you said, they're coming out with their announcement tomorrow. Now, in the last meeting, they cut it a half point, Jesse. And I think everyone at that point was thinking it's almost a shoo-in. They're going to do another half point cut here on this November meeting. Right now, the CME gauge, I think, puts it at about 98% chance that they're only going to give a quarter rate cut. But if they would surprise the market, let's say they don't do a rate cut at all, then you're going to get people thinking, wait a second, maybe inflation is a problem. And potentially that could be very bullish commodities as you see the inflation play come back into play. But on the other side of the equation, if you went the other way, and let's say they surprise us and they go with a half point rate cut. Like I said, no one's anticipating it, but let's say they surprise us and go the half point. Does that give the gauge that, hey, this economy is going strong, inflation is still tame, and does that plow money into the stock market and essentially suck some of the market money that's been moving into commodities recently back out of the commodities? So there's another, so you've got that macro driver. Then lastly, you do have a USDA report on Friday that it is the last change of the year. The December report, they tend to make no adjustments, but they tend to tweak this. The trade is guessing a steady corn yield and a slightly lower bean yield. But could they surprise us? Some clients of ours have been very pleasantly surprised with the beans late in the year, where the logic says they ought to, the late crops did worse. So we'll see. And then we'll see what they do with the demand situation, because the demand on the exports have been phenomenal. But the question is, was that phenomenon because they're front running the demand in front of the election here tonight? Or was it a change in buying habits? And they may be buying more than what the government's got on the balance sheet. So we'll get that opinion on Friday as well. So a lot of news being thrown at the market.
Well, and to that point, I think we know pretty well at this point that we've got supply. It's now about the demand function of these markets. And to your points, we've been seeing the export sales, et cetera, but now it just feels like it's going to be figuring out the demand side here moving forward. And as a producer, being ready to react in the event that there are marketing opportunities, right?
Exactly. And when you look at the demand side, you got to move away just from the domestic side, Jesse. You got to move all the way back up and look at the world front. Let's give you the bearish side first. The bearish side, unfortunately, is the beans. Brazil started their planting season a little bit later than normal. Okay. But they played catch up. They're now 53% planted is the last number I saw. That's about 4% higher than the 5-year average. They, for all intents and purposes, have caught up. The forecast holds like it should. They should be able to get this crop planted on a timely basis and have the moisture to produce a trendline yield crop. And what's bearish about that is if they have a trendline yield crop, it'll push world ending stocks to all-time highs. It'll push stocks to use to all-time highs. And I would argue just on a pure economic basis, that's not $10 beans, it's $9 beans. Now, are we going to go to 9 right away? I don't believe so. But I think as this market gets convinced that the demand, the supply is there, we're going to lose the demand we have, and it's going to shift to Brazil. Remember, the balance sheet right now is assuming we're going to increase our demand 150 million bushels year on year. And some of that's going to go to China. If the economic or trade war situation doesn't come to fruition, or just plain and simple, Brazil has this monster crop that they're selling cheap, we may be overstating our demand by 150 million, which could push our carryout back over 600 million, which I would argue is not $10 beans, it is $9 beans. So that is the bearish side. On the bullish side of the world situation is the beans did not get planted early in Brazil. They got planted on time, which means they'll get harvested on time. But it also means they're not going to get the safrinha crop in early, which risks they may run out of water if this rainy season ends early. If that happens, it trims the world corn supply quite a bit. And right now, the projected world exportable supply of corn in the world is one of the tightest it's been the last couple of years. So even though we got about a 2 billion comfortable carry out in the world on the corn, or the domestic on the corn, the world numbers are tightening. So if that safrinha crop would tighten up a little bit, you could see the corn market catch quite a little of a bid, maybe late spring, early summer. So the corn number might have a little bit friendly world number, but the bean number is bearish, unfortunately.
Jim, how about in the protein sector? Cattle, hogs, we should touch on those markets a little bit. I feel like, I'll say this and then I'll let you react. Hogs, I think, have gotten a little overbought I think we're seeing some of that early this week. And then cattle, it still feels like we're chopping around in this cattle market. I've been concerned that maybe we're going to pull back, have a bigger pullback, but haven't really had it yet. What's your feeling in the proteins right now?
On the hogs, I agree with you. I think they're overbought. I think they're a little bit they're a little bit over their skis right now. I think they could correct a little bit. We were down today. You've got the risk because we'd have a bearish opening tomorrow, maybe a gap lower tomorrow for whatever reason. You could leave an island top on the chart, which is a kind of a technical bearish signal. And that could be like ringing the bell and telling some of the traders time to exit and book the profit on the hogs. On the cattle, I agree. We're trying to hold some of the near-term, long-term supports, 200-day moving average. But I do believe this cattle market, it's a little bit long in the tooth. We know the supplies are tight. It's all coming down to demand. If I'm a producer out there, both the cattle and the hogs, and I don't have them marketed, I would at least get some sold or at least consider using some options to reduce risk. There is a lot of uncertainty in the world right now. You have the elections. You also have, like I said, you have a China. We didn't talk about it, Jesse, but they're going to release their stimulus package at the end of the week. That could be very bullish for the hogs, or it could be very bearish if the trade's disappointed in this, on the stimulus measures they've got. So it's pragmatic, I think, to essentially just use options as a way to maintain risk. Like I said, the one thing about the livestock market, the old line is it goes up in an escalator and it goes down in an elevator. So when they turn, they tend to turn very, very fast. So, I think now is the time to try to take advantage of this run and mitigate risk.
Jim, final thoughts. We've covered a lot here in a short amount of time today, but again, just with so much uncertainty, I really think it comes back to the risk management side and being nimble is my favorite word that I'm using as of late, but being in position to know your margins and have your plan ready to go as we work into the end of the year. That's what it feels like, playing the long game here a little bit, I guess is what I would say. I mean, talk about some risk management stuff, some final thoughts for us here on election day.
Well, final thought right now on the risk management, like I said, is, where you're at right now. If I'm a producer right there, if I haven't done it, I need to recalculate my cost, recalculate my break even. A lot of producers luckily found out their yields are better than what they thought. Everything's put away now. Let's find out where our break evens are, and let's get these orders working where you want to take advantage of it. I think the odds are high we're going to chop around here the next couple of weeks potentially. But I think in general, you've got to have a bearish bias, I believe, unfortunately. Like I said, this bean situation could be very cumbersome in the world. And like I said, the corn number could be friendly, but the bean number is bearish. If beans go to 9, Jesse, corn's not going to be trading July corn at 450. It's going to be a lot lower. When you look at this carry, everyone's put grain in the market. You guys all got grain in your bin, not the market, but in the bin. And you're looking out saying, look at that price of July corn. It's paying me to store it. And yes, it is now. The problem is if we have a bearish economic situation, whatever it be, if Trump gets elected and we're in a bloody trade war per se, potentially, could the corn prices be a lot lower? Yes. So now's the time to take advantage of it, put orders in to market it. And then, if you want to play the what if, I'm recommending options to the upside. Because the fact of the matter is we are still very dry in the Midwest. We know how the weather this year went. It was very erratic. Went from wet to dry, and now we're getting rain. How the 2025 weather season is going to break, nobody knows. How the China economic stimulus is going to work, nobody knows. How this election is going to work, nobody knows. There's tools out there to manage risk, but don't get just caught up in the 24 crop. I'm actually encouraging you guys to start using the 25 crop and start marketing it. We're using some short-dated options just to put a floor into some of these new crop prices because we are concerned, like I said. If Brazil has a big crop, the world has too many beans combined with the weak economic situation out of China. Historically, that's not a bullish price pattern. Unfortunately, it's a bearish, but there's tools to mitigate that risk. You just got to use them.
Jim, if folks want to reach out and have a conversation with you guys there at agmarket.net, take a look at your intel, sign up for your conference coming up in the early part of the new year in Nashville as well. I know it's as simple as checking out the website, making a phone call, et cetera, right, Jim?
Exactly. Go to agmarket.net. You can sign up for our research. You can get a free look of our app. And better yet, you can come to our conference. And guess what, folks? You come to our conference, you get to hear Mr. Jesse Allen will be performing at the cocktail party. And if no one's ever heard, Jesse is an awesome singer. And if no one knew that, I'm sure he doesn't like to toot his own horn, but I am. So please, if there's any reason to come to the conference, come meet Jesse in person and listen to him and have him sing to you.
Well, thank you for the shameless plug, Jim. I do not toot my horn as much as I probably could or should on these programs, but looking forward to being there with you guys. And folks can get more details beyond me singing. They have a lot of great speakers and info coming up at their conference. Agmarket.net for more. Jim McCormick, agmarket.net. Always good to talk with you, my friend. Thanks for joining us today. Appreciate it.
Thanks again. And remember, folks, go out and vote if you haven't done it yet.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.